Good morning. Values and rational could take a backseat. The scary ride of the previous few sessions will take a break as risk aversion has subsided somewhat after China dismissed a report saying it was mulling powering its holding of European bonds. This helped spare a worldwide rally in equities and commodities. The euro too rebounded while gold dipped. After long, we have a bright morning to start with as we stare at a gap-up opening and hopefully another day of solid gains. Asian markets are upbeat following the overnight bounce in the US as well as the European markets. Still, it would be a foolhardy to take the recent pullback in stocks as a decisive turnaround and start buying aggressively. The problem in Europe and other advanced economies have not vanished. So one expects the volatility to persist for some time to come owing to uncertainty about the global picture. What we are witnessing lately is more of a relief rally from the low hits in the current intermediate downtrend. This advance has to sustain for a while to restore investor confidence. Also, FIIs who have been net sellers for quite some time have to resume their buying spree. Even prior to the current falls, the Indian markets had struggled to break out of a range. We have to see whether this time is different and the key indices will head higher after dust settles on the Eurozone debt crisis. For India, the prospects appear really good. The next big trigger will come from monsoon and hopefully the rain gods will be kind enough this year. The government will announce GDP figures for the January-March quarter as well as for the full year on Monday. Reports suggest a sharp bounce back from the same period last year. Consensus estimates are pointing to 8 to 8.5% kind of a number for quarter 4. For the whole year, the GDP may just beat the official forecast of 7.2%. One has to keep a close watch on how the monsoons begin and progresses in the weeks and months ahead. Last year was pretty bad for the agricultural sector, so naturally everybody is keeping their fingers crossed and praying for a normal monsoon season. Among the stocks, Arriva T&D could be in focus on the announcement of an open offer by its parents. SCI will be another stock that could rally on speculation of disinvestment and a bonus as well. Apollo Hospitals and Imami boards will discuss a stock split today. Tata Steel to increase the stake in Canada mining firm New Millennium Capital Corp. The government may give preference in gas allotment to power projects of the ADAG group if RIL picks up equity stakes in them. Promoters of Tata Steel may invest 1.33 billion rupees, a move that would increase the promoters' holdings by 3% to 38%. The annual monsoon on track to hit the southern coast in the next 3 to 4 days. Banks ask RBI to defer liquidity tightening. LIC can't charge fee for transfer of policy as per the High Court judgment. RBI gives thumbs up to the SLR cut in a move to create headroom for the 20 billion rupees liquidity. Moving on to the recommendations, the derivative strategies are long Bharti Airtel June future in the range of Rs 262 to Rs 264 for a target price of Rs 273 and a stop loss is to be placed at Rs 258. And long Infosys June future in the range of Rs 2645 to 2650 for a target price of Rs 2700 and a stop loss is to be placed at Rs 2625. The technical calls are a buy on UCO Bank. Traders are recommended to buy the stock at levels of Rs 72.5 to 73.5 for a target price of Rs 78 and a stop loss is to be placed at Rs 70.50. And a buy on LIC Housing Finance. Traders are recommended to buy the stock at levels of Rs 952 and exit at levels of Rs 960 and maintain a stop loss at Rs 905. Thank you and have a great day ahead.